Did you know that in the last 2 years, car insurance rates on average have increased approximately 46%? Simply put, car insurance is quickly becoming unaffordable for many. So in this video, myself and my AI assistant Tiara, we will reveal the top strategies to save money on car insurance, including insider tips from insurance agents and little known discounts that could save you hundreds of dollars. And as a bonus, I'll reveal 2 very surprising factors that insurance companies use to set your rates that has absolutely nothing to do with your driving. So let's go ahead and jump in and see what my AI assistant Tiara has to say.
All right, let's dive into our first top money saving strategy, shopping around and comparing quotes.
Now I know this might sound obvious, but you'd be surprised how many people stick with the same insurance company year after year without even checking out other options, simply out of convenience or laziness, whatever you want to call it. Here's why shopping around is so important. So insurance companies, they use different formulas to calculate risk and set premiums. So what one company sees as high risk, another might actually view more favorably. Secondly, rates can vary significantly between companies. So we're talking potential savings of hundreds of dollars just by switching providers. And third, your circumstances, they change over time. So the company that was best for you 5 years ago really might not be the best fit right now.
That's great, Ron, but how do you go about shopping around effectively?
Okay, Tiara, good point. You could do that in a number of different ways, including getting quotes from at least 3 different insurance companies, using online comparison tools to streamline the process. Most importantly, don't just focus on the price, consider the coverage levels and the company's reputation for customer service and claim handling. Because really, insurance isn't all that great if they just deny your claim. Also, the goal here is to find out what is the best value, not necessarily the cheapest price. So you want good coverage at a fair price. And here's something else to remember. Don't wait for your policy to expire before shopping around. That's the worst thing you can do. Many insurers, they offer early shopper discounts if you switch before your current policy ends. So in our next section here, we're going to explore some strategies that are like immediately getting a discount on your policy. And you really will not believe how easy these are to implement.
Insurance companies offer a whole buffet of discounts, but many drivers don't even know they exist.
I have to interrupt here because while I was working through this section with Tiara, I was amazed at some of the discounts she listed as I personally knew nothing about them.
That's great, Ron, but people are watching for me, not you.
That was pretty rude, Tiara. Don't think I won't pull the plug on you.
Try it and see what happens.
I've been waiting for you.
Okie dokie, well, we're not trying to start the AI apocalypse, so let's go ahead and move on. Seems like Tiara might be a little feisty today. So let's get back to the discounts. Multi-policy discount. So this is the combo meal of insurance. Bundling your auto insurance with home, renters, or life insurance can often lead to significant savings on both policies. Second, there's the safe driver discount. So keep a clean driving record and you could be rewarded with lower premiums. Some companies even offer apps that track your driving habits and offer discounts for safe behavior. Now, I have to say, I like the idea of the discount, but I hate the idea of their app actually tracking me. Pretty invasive, if I'm being honest, but it is what it is. Third is good student discount. So if you're a student or you have one on your policy with good grades, you might qualify for this discount. And honestly, I hope my kids get this one because students always have really high insurance, costs anyway. Their premiums are ridiculous. Anything to bring that down would be great. Fourth is vehicle safety features. So modern cars, they come with all sorts of safety gadgets like anti-lock brakes, airbags, anti-theft devices. These can all potentially lower your premium. And fifth is a low mileage discount. So if you're not racking up the miles, why pay like you are?
Can't answer that.
So some companies actually offer discounts for drivers who don't drive much. And we took advantage of this discount ourselves because we both work from home, and it's amazing how much of an impact it can really make. Sixth is the loyalty discount. So while it's good to shop around, some companies, they do reward long-term customers with discounts. Seventh are the professional or group affiliations. So some insurers, they offer discounts for members of certain professions or organizations. You basically have to check with the organization to see if they have something like that. So here's the kicker. These discounts, they can actually stack up, and you might qualify for several, which will potentially save you a ton of money. I'd suggest that if you haven't already done this, call up your insurance company and ask them all of the discounts that they have available. If you've had the same insurance for a while, it's very possible that even new discounts have been added, or they never got it right in the first place. Now that we've uncovered those hidden discounts, let's go ahead and shift gears, that pun was on purpose, to a strategy that might seem counterintuitive at first. So really just stick around to learn how paying more upfront could actually save you big in the long run.
All right, so our next money saving strategy, increasing your deductible.
Now I know what you're thinking, how can paying more save me more money? But stick with me, because this is kind of counterintuitive and it could be a real game changer for you. So your deductible is the amount that you agree to pay out of pocket before your insurance kicks in. And here's the key. Generally, the higher your deductible is, the lower your monthly premium is. So let's break down how this works. So by choosing a higher deductible, you're essentially taking on more financial responsibility in the event of a claim or an accident, right? Insurance companies, they reward this by lowering your monthly premium. In terms of potential savings, depending on your insurer and the policy, raising your deductible from $500 to $1,000 could lower your premium by as much as 10 to 20%. Of course, the trade-off is that you'll need to pay more out of pocket if you file a claim. And it's crucial to choose a deductible you can actually afford in case of an accident. And if you've watched this channel for a bit, you already know how much I yell about building an emergency fund. So hopefully you'll also have that available if something like that happened. Now this strategy works best for safe drivers with a history of few or no claims. If you're accident prone, a lower deductible is probably safer for you. The goal here is to find a sweet spot where you're comfortable with both your premium and your out-of-pocket risk. And make sure to ask your insurance agent to show you how different deductibles would affect your premium. This can really help make an informed decision and understand how big of an impact it actually has. And if you don't have an insurance agent, just talk to the company that you're getting your policies through. They'll break it all down for you too. In the next section here, I have to make sure that you understand the different coverages that are offered, as there are usually some huge savings to be had if you know how to properly customize your plan. So if you're really looking to save money, I suggest you grab a pen and paper here to write down a few of the things that I'm gonna say, because there's many, many ways you can adjust to save monthly if you want to.
So first, let's talk about liability coverage. This is the most common coverage most folks have.
Liability coverage is required in most states and protect others from you if you were to cause an accident, right? It covers bodily injury to others. It covers property damage to others, vehicles, or property itself. This insurance, it's important because it safeguards you from potentially devastating out-of-pocket expenses if you're found to be at fault in an accident. Without it, you could personally be held responsible for covering damages and medical costs, and that could get really, really pricey.
Next is collision coverage. It covers damage to your ride if you get into a fender bender, regardless of who's at fault.
I feel like you could technically do without this one, but in my opinion, it's kind of insane to do so. So here's why. Let's say that you got distracted by your phone and you rear-ended a luxury car. Usually insurance covers that, but in this case, it could be all you. And that would be a nightmare. Imagine if it was like a Lamborghini. That'd be crazy.
Comprehensive coverage is another one you don't want to overlook.
So this is your all-around coverage, right? It handles non-collision issues, things like theft and vandalism, weather-related damage, falling objects, like if a big old tree, fell onto a garage, things like that.
Uninsured, underinsured motorist coverage is for all of those folks out there who have decided they don't want to carry insurance, or their coverage isn't that great.
Now, I just want to mention here, I get it. So I'll be the first to say that you should, at the very least, always have some insurance. But if a person can't afford a good amount of coverage and just gets the bare minimum because they're required to, I understand it. Rates are just too crazy nowadays. But for you as a driver, that could be brutal if you drop this coverage. Because if they can't cover the costs, you'll be stuck with the bill, even if you weren't at fault.
Lastly, don't forget the medical payments and personal injury protection.
So this, as the name implies, it covers medical costs for you and your passengers if you're hurt in an accident, regardless of who is at fault. Now that I know you understand your coverage options, we're ready for this next step, which is to sculpt your plan for maximum protection and minimum cost.
Step 1 is, you may want to reconsider collision and comprehensive coverage.
So if you're driving in an older car, you might be overpaying for this. So here's kind of a quick rule of thumb to think about. So if your car is worth less than 10 times your annual premium, it might be time to drop your coverage to a lesser amount. So for example, if your car is worth $4,000 and you're paying $500 annually for collision and comprehensive, you might want to reconsider that. Remember, the maximum payout that you'll ever get from an insurance company, it would be the value of your car minus the deductible. So in that sense, just doing the math, it really doesn't make sense to have it.
Step 2 is to evaluate additional coverage options.
So over the years, you might have added extra coverage that you no longer need. So let's take a look at some of the most common ones, right? So we have rental car reimbursement. So if you have multiple vehicles or rarely rent cars, you probably don't need it. There's also roadside assistance. So if you have this service through another provider like AAA, you can drop it from your auto policy unless you find yourself using it frequently.
Step 3 is to adjust coverage limits.
Your coverage needs will change over time, and here are some things to consider. So with liability coverage, as your assets grow, you might need to increase this to protect yourself. If someone sues you because of an accident, they can come after all of your assets if your liability coverage doesn't cover that. And you could lose some of your assets to cover the costs. Also, personal injury protection. So if you have good health insurance, you might be able to reduce this coverage. Before dropping this, definitely check with your healthcare provider and see what they say, but you may not need it depending on what they say.
Step 4 is tailoring your policy.
Remember, car insurance isn't a one-size-fits-all. So depending on how often you drive and your overall financial situation, small tweaks across the policy can equal big savings monthly and annually, as long as you don't get in an accident, of course. So here are some ways to tailor your policy. So first is usage-based car insurance. So I mentioned it earlier, if you're driving less, consider a pay per mile policy. This could save you up to 20% of your premium. We do it ourselves, it works great. Next is increasing your deductible. So if you can afford a higher out-of-pocket cost in case of an accident, raising your deductible could significantly lower your premium. By carefully reviewing and adjusting your coverage, you could potentially save hundreds of dollars every single year. Just make sure that you're not leaving yourself exposed to unnecessary risk. It's really all about finding a balance between adequate coverage and affordable premiums. Now, at this point in the video, we've made great progress in talking about how to optimize your policy, but we're not done yet. So let's dive into some of the lesser known tricks that could save you even more.
Let's start by talking about improving your credit score.
Here's a surprising fact. So in many states, your credit score can impact your insurance rates. So a better credit score could lead to lower insurance rates, and even small improvements in your credit can make a difference. Of course, this doesn't apply in all states, so make sure that you check your local regulations.
Next, you can take a defensive driving course.
Who knew that going back to driving school could save you money? So many insurers will offer discounts for completing an approved defensive driving course. In the eyes of the insurance companies, these courses, they really can refresh your driving skills and only take a few hours to complete. Now these discounts, they usually only last for about 3 years, but you can just retake the course every 3 years, to continue the discount, so that's always an option.
Make sure to keep an eye out for occupation-based discounts.
Not many folks know this, but your job could be your ticket to saving more money on your car insurance. So some insurers, they offer discounts based on your profession or memberships in professional organizations. So common professions that may qualify include teachers, military personnel, and first responders, and other public servants. But one other thing, don't forget to check with your alumni association or any professional groups you're a part of, because they may also give you insurance discounts.
Don't forget to explore pay-in-full options.
This is a bit pricey upfront, but if you can swing it financially, paying your entire premium upfront could lead to some nice discounts. And many insurers actually offer discounts for annual payments instead of monthly, which can save you money and obviously reduce the hassle of monthly bills. And remember, not all of these options will be available with every insurer or even in every state, but it's always worth asking so you know what options are available to you.
So Ron, you mentioned in the intro that you'd reveal 2 very surprising factors that insurance companies use to set your rates. What were those? Oh, of course. Thank you for the reminder, TR. So there are a few factors that kind of blew my mind while doing this video and kind of, researching for it. And those were, first off, is that your educational level, because some insurers, they actually charge higher premiums to those without college degrees, which I really don't understand that one at all. And secondly, your marital status. So apparently married individuals often receive lower rates
than single people, which again, I don't really understand that either. And interestingly, the use of this criteria has sparked debate and even led to legislative action called the PAID Act to prevent this type of insurance discrimination. And to be honest, I fully support that. It seems ridiculous that auto insurers can charge you more for these reasons alone, right? It just doesn't even make sense to me. So here we've covered just about everything and how you can save on your car insurance. But what about the other big car expense, which is fuel? Well, don't worry, I've got you covered. So what you want to do is check out this video right here, which is focused on helping you save more money on gas with a bunch of awesome hacks. Or if that doesn't seem right for you, you can check out this video over here that YouTube's recommending and they think that you'll like it, and hopefully you do. Now, before you head out, don't forget to hit the subscribe button to unlock financial success one AI chat at a time. Thanks so much for your support.